Central banking week opened with the RBA unexpectedly raising rates by 25 basis points, taking rates close to 4%. Despite this, inflation in Australia is slowing. Barring surprises, the most possible scenario is a pause in the rate hike. Wednesday was the day of the Fed, which also raised rates by 25 basis points to 5.25, even though Powell has announced a forward guidance where the data will be analyzed month after month to make decisions on the matter. The general idea is that with the ongoing banking crisis, the Fed will hardly continue to raise rates. The most probable scenario is that of a pause for the next few months. The ECB brought rates to 3.75% with an increase of 25 basis points, effectively slowing down given that the past increases were 50 basis points. Despite Lagarde has announced that they will not take breaks given that the inflationary situation in Europe remains critical. The most likely scenario for the next meeting remains another 25-point hike. Other economic news concerns the manufacturing sector, which has seen a sharp slowdown in Germany and China, while the services sector continues to grow. No farm payroll week saw a surprise drop in unemployment from 3.5% to 3.4%, and wages also increased by 0.1%, meaning a Fed pivot is much less likely than the market is currently discounting. What can we deduce from this week's macroeconomic data? The forex scenario remains unchanged, with Europe therefore EURGBP-CHF, which should, given the high inflation, remain aggressive and therefore strengthen. The Asian, oceanic currencies remain the weakest. Beware of some backfire of the US dollar that could bring volatility. As far as stock markets are concerned, continue to prefer services to manufacturing. Attention to the market, which is discounting a rate cut which is unlikely to happen given that the world of work remains low. This could lead to strong corrections. Follow the trend of the markets on our website. Trendy Stocks. Trade.